Hi everyone, welcome to the webinar and workshop series conducted by TCS in lieu of the upcoming MCS exams happening in August 2025. My name is Nick and I'm one of the lead tutors for MCS at TCS, and in tonight's session we have Jared, our co-tutor for MCS as well, and he will be conducting the latter part of tonight's workshop. So let's look at the session outcomes. So first things first, I will be taking you through a 3-week study plan. So if you are yet to start preparations, you still have time. So with the intention of making sure that you understand what you need to achieve in the upcoming weeks, I will be sharing the 3-week study plan with you. Also, some of you had already attempted mock number 3 as per the original study plan. So, we have gone through the answers and we have spotted some shortcomings and focused on each of these shortcomings. I will be explaining each of these shortcomings, and I will tell you what you need to achieve to overcome these shortcomings when conducting preparations in the upcoming weeks. And then Jared will take over and he will take you through the F2 syllabus. And after doing so, he will take you through one of the mock exams, which is one of the sections rather taken from MCS mock number 1, so that you'd gain a good understanding of how to tackle a commonly tested F2 related area. And all these will be followed by a Q&A session towards the very end of tonight's workshop. So let's look at, before we get into the technicalities, let's discuss or let's try to understand what we have scheduled for you. So similar to what we are going to cover within tonight's webinar, we will be conducting webinars focused on your P2 and E2 syllabi as well. And the P2 workshop rather is happening on the 26th of July, a Saturday at the same time, 6 GMT or 5 PM UK. And in each of these workshops, just like what I'm going to cover in today's workshop, I will be, or Jared rather, will be taking you through your P2 and E2 syllabi, and at the same time, discuss mocks concerning your P2 and E2 syllabi. And in the final workshop, which happens 2 or 3 days before your examination, I will be sharing last-minute tips with you to make sure that you walk into the exam with a high level of positivity. So make sure to attend these workshops without fail, just like you've attended the previous webinars. This is the best way to keep tabs about your performance on a weekly basis. And if you have any questions, you can get them addressed instantaneously if you join these workshops live without fail. So having said that, let's try to understand what you need to achieve in the upcoming 3 weeks. So you have something like 3.5 weeks at your disposal if you consider the exam week as well. So in the first week, which is if you can start from tomorrow, then it's going to be really beneficial for you. So in week number 1, you are supposed to kickstart your preparations by watching the pre-scene analysis videos, because before you start anything, you need to gain a good understanding of what appears within your pre-scene. So there are 6 videos in total. Please go watch these videos. Then you will gain an in-depth understanding of what's highlighted within your pre-scene. You need not waste time to decrypt pre-scene information. We have done it for you. So simply watch these videos. Once you have done with these videos, then watch the recorded version of the 3rd webinar, answering technique. You should only do this if you missed it. If you had already attended it live, or if you had already watched the recorded version of webinar number 3, you can skip this, but it's essential before you start your mock attempts. It's essential that you learn answering and time management techniques. So that's why you are supposed to watch it if you are yet to, watch the recorded version. And then you have to kickstart your mock attempts, thereby attempting mock number 1 via the exam platform. So attempt mock number 1 under exam conditions, which is the best way to practice your answering, time management, and stress management techniques. Once you are done with mock number 1, redevelop answer plans, thereby conducting revision, because there's absolutely no point of you trying to revise theories on your own and try to figure out application on your own. Simply refer to the answer plans which we have shared with you and try to replicate the same methodology, the same type of answer plans. That's the best type of revision you should conduct, especially given the fact that you simply have 3.5 weeks at your disposal. Once you're done with mock number 1, then focus your attention towards mock number 2 and attempt it under exam conditions via the exam platform. After attempting it, watch master classes focused on mock 2 to learn theory and improve application, because as you know, in each master class we are explaining the logic behind each answer, and at the same time we are teaching you the theoretical elements covered within each of our mock exams. Also, we are teaching you application. So rather than you trying to figure out application on your own, rather than you learning theories in isolation and then trying to figure out application, simply watch these master classes. Then you will easily learn all syllabus areas, because we have covered all syllabus areas across the 6 mocks which we have developed. And at the same time, in the same video, you will learn application as well. So once you have learned your theory and application, test your knowledge by redeveloping answer plans focused on mock exam 2, thereby conducting revision. So similarly, in week number 2, focus your attention towards attempting mocks 3 and 4 and conducting revision focused on the same 2 mock exams. And in week number 3, attempt mocks number 5 and 6. Again, not just attempt them, you are supposed to learn theory and application by watching master classes and then redevelop answer plans, thereby conducting revision. And in the exam week, you are not expected to do anything. Simply go through the answer plans which we have shared with you, focused on the 6 mock exams. Just go through them, just revise them, because if you do so, it's as if a day or two before your examination, you are going through the entire syllabus, because as I've mentioned earlier, when developing the mock exams, we have made sure to cover all syllabus areas. So when you are going through these answer plans closer to the examination, it's as if you are going through the entire syllabus. And at the same time, you are reminding yourself about your application, what you need to do with regards to application, and then reread the annotated pre-scene one last time and stop all work a day or two before your examination, because I don't want you to be stressed before you walk into the exam, because if you're calm and composed before the exam, you will be calm and composed during the exam. If not, if you're stressed, if you are up till late before the examination, or if you are panicking before the examination, definitely you will struggle a lot at your exam. You will run out of time, you will panic leads to brain freeze, and when you are exposed to brain freeze, you'd end up losing a lot of time, and then you'd get emotional, and all these things will lead to extreme levels of stress, especially given the fact that you are operating in a time pressured environment. So I've highlighted what you need to do to overcome these type of stressful situations in the 4th webinar, because I taught you stress management techniques as well. So if you missed it, please go watch the recorded version, which can be accessed via our YouTube handle and our student dashboard. So I hope if you're yet to start preparations, you still have time. I hope you will stick to this study plan, because if you do so, this is the best way to conduct your preparations. This is the smartest way to conduct preparations, because you can get the best output concerning the limitedness of time, because you have simply 3.5 weeks at your disposal. So don't waste your time to do everything under the sun. Simply stick to the study plan, and this will significantly improve your chances of passing the upcoming MCS examination. Okay, so having said that, let's look at the general feedback. So as I mentioned earlier, most of you had already completed mock number 3, which is extremely good, which shows the fact that you are on the correct track. So let's try to understand the type of shortcomings myself and Jared encountered after going through your answer scripts. So first things first, the biggest problem was with regards to you providing generic or vague explanations. So this takes some practice, because as I mentioned earlier, I mentioned in the 4th webinar that the examiner expects you to come up with justified arguments. So whenever you are presenting your thoughts, or whenever you are recommending something, you have to back them up with appropriate justifications. You cannot simply say it is recommended to do this. Instead, you need to explain as to why you are recommending something. You need to say, okay, I'm recommending this because of these factors. So it appears that you are still struggling with this, but don't worry. With practice, if you stick to our answering and time management, if you practice our answering and time management techniques, and if you take steps to redevelop answer plans, you can easily fix this problem. And also, on top of seeing vague explanations, we also encountered the fact that you are bringing in unrelated pre-seen information or generic pre-seen information with the prime intention of showing to the marker that you know your pre-seen. So always remember, whenever before you bring in pre-seen info, always think whether it adds value to your answer. For instance, always remember what your role is. You are playing the role of a finance manager, and when you are responding to just think that you are really doing this role. And when you are responding to your superior, will you ever talk about what happens within your company if it's not relevant to the information your boss shared with you? So when developing answers, always make sure you are supposed to consider the unseen info. There's absolutely no point of relating to the pre-seen unnecessarily, unless and otherwise it adds value to your arguments, or it referring to the pre-seen adds value to your justifications. So don't simply bring in irrelevant pre-seen info, generic pre-seen info, because when going through your answers in the first paragraph of each section, we saw some of you had included generic info, such as the fact that Trimayr is based in this type of an industry, and we are operating in this country, and we have this amount of salons which are operated by our own, and we have signed this amount of franchise agreements. All this information which appears within the pre-seen is not too relevant to an F2 related question, for instance. So the question is on F2, but we are mentioning about the number of salons which we have opened, and this makes absolutely no sense, adds no value to your answer. So avoid bringing in irrelevant pre-seen information and including them within your answers. And at the same time, whenever you are explaining something, try to justify your position as much as possible. You'd gain a good understanding of the type of answers or explanations you should present in your answers by going through our master classes. And when you have access to our answer plans, you can easily figure out the type of justifications you need to provide when developing answers. And also, the second problem is with regards to developing highly theoretical answers or dumping theory. So just imagine, when you're working for a company, will you try to, when responding to your boss, will you try to address the requirement at hand in a practical manner, utilizing the conceptual knowledge which you have gained via what you have learned? Rather than doing that, will you try to explain theoretical concepts? Because if you're working somewhere, if you try to explain theoretical concepts, you will one fine day get fired, because your manager or your superior is not interested to learn theories. Instead, he or she wants to get your opinion about something. So when conducting your evaluations, when recommending something, you are supposed to utilize the theoretical concepts which you have learned via F2, E2, and P2 syllabi. Yes, that's accurate, but there's a way in which you need to apply these theoretical concepts when developing answers. So that's why we have, throughout the webinar series, we mentioned the fact that you need to significantly improve your application skills. So you can significantly improve application skills when you watch the master classes, because then you learn application skills. And after learning these skills, then you are supposed to test your knowledge by redeveloping answer plans, because just because you attempt the mocks and watch the master classes, you will not improve your application skills. You need to redevelop answer plans to improve your application skills. So when conducting preparations, it's all about improving your skill set. So what type of skills are we talking about? Answering, time management, and stress management. So you need to refine these three techniques when attempting each of our mock exams. And when conducting revision, you are specifically focusing your attention towards improving your theory knowledge and working on your application skills. So it's essential that you take steps to conduct revision, thereby to redevelop answer plans. If you do so, you will significantly improve your application skills. If so, you can avoid theory dump when developing answers. And also, some of you, especially towards the last two sections, probably because of fatigue setting in, you have simply mentioned parts of the answer plan. You have not taken steps to expand the answer plan, probably because of the fact that you ran out of time as well. So, avoid, as per the CIMA examiner, you are not supposed to provide answers in bullet points or single line sentences. Instead, you are supposed to provide answers in paragraphs. I explained all these things in the third and fourth webinar as well. So avoid these things. So you can, take steps to again improve your answering technique by attempting each mock exam under exam conditions via the exam platform which we have developed, because we have invested a lot of effort and financial resources towards replicating or creating the exact replica of the Pearson VUE system, with the prime intention of ensuring that you have access to the exact platform which you'd utilize at your real examination when conducting preparation. So, make sure to use this for your benefit. Don't give up. Don't give up the fight towards the last two sections. I know for a fact that it's not too easy to sit in one place and be exposed to extreme levels of stress. It's not too easy to operate in a time pressured environment, but it's essential that whenever you are attempting a mock exam, it's essential that you get your bearings, that you are exposed to these type of stressful situations, and that you get your bearings with these type of situations, so that you know what to do when you face similar situations at your real examination. And insufficient answer points or content was a problem as well. So this happens due to lack of theory knowledge. If you are clueless about a certain theoretical concept, for instance, then you won't know what to include within your answers, then you'd struggle. So one step to overcome this issue is to learn your theory. And the easiest way to learn theory is to watch our master classes. And on top of that, even when you know theory, if you're clueless of how you should structure your answer, then you still struggle. So that's where, again, our master classes come into play, because in our master classes, we are not just teaching you theory, we are also teaching you application skills. And when you are redeveloping answer plans, thereby conducting revision, you are again working on improving your application skills. Then you can avoid this mistake or avoid this issue. And lastly, with regards to language, some of you had developed answers as if you are chatting with one of your friends, but you are supposed to be professional, because you are playing the role of a finance manager. You are not chatting with a friend. You are reporting to the senior finance manager or any other type of senior manager. So when doing so, you are deemed to respond in a professional manner. So stick to the guidance which we provided in the third webinar. And on top of that, if you're struggling with professional language skills, don't worry, go through the suggested answers which we have shared with you. Then you'd realize how you should develop your answers in the most professional manner. So that's the feedback which I wanted to share with you. And before we move on to the F2 related areas, let me quickly tell you what we offer at TCS. So yes, Jared, if you can scroll down. Yes, so I'm not going to take a lot of your time, because I've been preaching about what we offer and whatnot, the dynamics of our website and whatnot, how to utilize our student dashboard in the webinar series. So I'm simply going to, run through the packages on offer. So we offer two packages, the Essential and Premium course. The Essential is designed for those who have completed their OTQ syllabus elements, or those who are coming through the general route. So since you have completed your OTQ examinations, you already know theory, so you need not do anything to learn theory. It's simply a matter of taking steps to improve your application skills. So under the Essential course, you would gain access to the recordings of all webinars and workshops which we conduct on a weekly basis, 6 mock exams with suggested answers. And as I mentioned earlier, we have made sure to cover all syllabus areas across these 6 mock exams. You will also gain access to pre-scene analysis videos, watch them to gain an in-depth understanding of your pre-scene document. You would also gain access to the annotated pre-scene, the industry and financial analysis slides. So in the annotated pre-scene, we have, via these annotations, we have effectively summarized the entire pre-scene. Also, we have highlighted probable syllabus areas which can be tested and probable exam scenarios which can be thrown at you. So considering all this information, we have developed our 6 mock exams. Also, refer to the industry and financial analysis slides to gain a good understanding of what happens within your chosen industry and what appears within your company's Trimayr's financial statements and its closest competitors. You'd also gain access to the top 10 likely issue slides, which indicate the most probable scenarios which can be tested at the exam. You will gain access to a case study familiarization kit as well. So once you have read through this kit, within 10 to 15 minutes, you stand a chance to gain an in-depth understanding of the technicalities behind your MCS exam. you will gain access to a tutor managed live chat and OTK revision card. So once, just imagine you invest on essential and you felt that you were struggling with a certain syllabus area. If that is the case, don't waste time trying to go through bulky study texts or your old study notes. Simply refer to the OTK revision cards to brush up your knowledge concerning all syllabus areas in a jiffy. So the essential course is priced at £249. And talking about the premium course is intended for those who are coming through the exemption routes or those who have failed the MCS exam previously. So both these sets of students have the same problem. There are gaps in theory knowledge and issues with application. So with the intention of teaching you theory and also making sure that you learn application skills, we have included some additional resources under the premium course on top of what appears within the essential course. So under the premium course, you'd gain access to the online mock exam platform, on which you can attempt all 6 mock exams under exam conditions, which is the best way to fine-tune your answering, time management, and stress management techniques. You will also receive tutor feedback on 2 mock exams, namely mocks 3 and 5, so that you stand a chance to understand your shortcomings. Because if you don't understand your shortcomings, you will commit the same mistakes at your real examination. So the best way to refine your technique is to spot your shortcomings. And once you have spotted your shortcomings, then you can take steps to overcome them when conducting your revision when it comes to redeveloping answer plans. And also, you gain access to answer plans of all 6 mock exams, which will help you immensely with regards to revision. You need not waste any time to develop answer plans on your own. We have already done it for you. And on top of that, you gain access to 20 master classes in total. You will experience, if you are joining one of our webinars or workshops for the first time, you will experience how we conduct our master classes in a little while when Jared is taking you through one of our mock exams concerning the F2 syllabus. So similarly, focused on mocks 2 to 6, we have developed master classes, and in each master class, whilst taking through the logic, teaching you the logic behind each answer, we are also teaching you the syllabus areas or the theoretical concepts covered within each mock exam, also teaching you application skills. So this is the best way to improve your theory knowledge and application skills. So the premium course is priced at £749, which can be paid in 2 installments of £374 each. Or if you opt to pay in full, you will save £100. If so, the price is just £649. Jared, so you can click on either of these buttons and invest on your preferred course. So Jared, I hope you can scroll down to the study plan area as well. Yes, so let's try to figure out, if you're sticking to our original 8-week study plan, let's try to figure out what you need to achieve within this week. So we are in week number 5 as per our original 8-week study plan. Some of you are sticking to this. So as per the study plan, you are supposed to focus your attention towards MCS mock number 4. So when attempting each mock exam, you are supposed to stick to the 3-step process, which is to attempt the mock exam via the exam platform. So when you do so, you are supposed to practice your answering, time management, and stress management techniques. Once you have practiced these techniques, then watch the 4 master classes to learn theory and improve application. Then you will realize how you should have structured your answers, what type of information you should have included, because this is the best way to learn. Because when you're attempting mocks on your own, you will commit mistakes. And when you watch the master classes, you will learn through your mistakes. You will understand how you should have structured your answers. Once you have learned theory and application, conduct revision by redeveloping answer plans. Keep developing answer plans over and over until you are satisfied about the fact that you are capable of replicating TCS's answer plans. So stick to this 3-step process, irrespective of whether you are sticking to the 8-week study plan or the 3-week study plan. So if you have already started your preparations and sticking to the 8-week study plan, focus on completing mock number 4 within this week. And if you're starting your preparations, then stick to the 3-week study plan, which I explained a while back. And as per the 3-week study plan, within this week, you should complete mocks 1 and 2. All right, so that's what we offer at TCS. I hope you'd start your preparations ASAP. Having said that, I'm going to hand over the proceedings to Jared so that he can take you through the F2 syllabus and then take you through one of the mock exams, thereby essentially conducting a masterclass focused on one of the mock exams which we have developed. So over to you, Jared.
Thank you, Nick. Welcome, everyone. And so the first workshop being focused on F2, we will be discussing a mock exam task from one of the TCS mock exams for Trimayr. But before we discuss the mock exam task, let's go through the F2 syllabus overview. Now, we've compiled a document which has the TCS mock exam syllabus coverage. And for ease of reference, I will use this document to give an overview of the F2 areas relevant to the MCS examination. First things first, please remember that you have study resources provided by CIMA. You have the official CIMA study text, which will include the content relevant for the OTQ examinations, and of course, which will also help you with the preparation of revisions for the management case study exam. But remember, you are not required to perform any calculations. So if you are using the official study text, you need to make sure that you don't get carried away with the calculation part of the topics. We also have the exam blueprint published by CIMA, which will have a breakdown of the different core activities that are examined by CIMA. And you will once again have the breakdown of the F2 related skills that you are required to demonstrate, but we've summarized the topics from F2 which are relevant for MCS in a document, and all these topics have been covered in our mock examinations, and therefore we have put them together as the mock exam coverage document. So I will take you through this document, and in the process, I will give you an overview of the F2 syllabus areas. Let's start with sources of finance. And of course, it's a relatively easier topic for most candidates. And it's also a topic which has been frequently tested in the MCS examinations. So as you know, there are two main sources of finance, equity as well as debt. And if you take Trimayr, our company, we have been funded both by equity and debt. So as part of your preparation for the examination, you are required to know the current capital structure of Trimayr. So as you know, we have the financial statements. And if you refer to the financial statements, you will find the values of total equity as well as debt. And remember, it's loans and lease liabilities total figure which has been provided. So there is no specific breakdown of how much loan that Trimayr has taken. But of course, you can use these numbers to understand the capital structure of Trimayr. And we've issued ordinary shares. There is no information pertaining to any other types of shares, such as preference shares. And we also have retained earnings, which add up to 100.1 million in equity. So that's the capital structure. I hope you are also aware of the gearings of Trimayr. So if you look at the gearing calculation based on debt divided by debt plus equity, for the financial year ending 31st December 2024, we have a gearing ratio of 45.9%, which is close to the acceptable threshold of 50%. So as part of your preparation, please understand the current capital structure of the company. And remember, this is based on the data available to us as at 31st December 2024. Things could be different when you face the examination because there could be new information, but definitely based on the pre-scene, you ought to know these details. And how could you be expected to answer a question on sources of finance? Well, remember, there can always be need for finance for Trimayr. And you could, at a very basic level, require to discuss the sources of finance relevant for the given scenario. So it could be open-ended where you have to consider both equity and debt, or it could be specifically focused on one of the two sources, equity or debt, and it could be an evaluation of the particular source of funding. So please remember the pros and cons of each of these sources, and you should be able to recommend which is appropriate based on the given scenario. And please remember, if you are required to compare different sources and provide a recommendation, then you should do so. But in the absence of uh, a comparison and a recommendation, if the task does not require you to do so, then you may be required to only evaluate one particular source. But please be prepared, and it's definitely a question where you can score good marks. And also remember, if there is um, a question pertaining to whether debt is appropriate or equity is appropriate, look for information pertaining to the amount that is required for the new investment, because you can recalculate the gearing, and based on the recalculated gearing, you would be able to make a more justified recommendation. Simply, if the gearing is exceeding 50%, then you can definitely raise the red flag saying, if we opt for debt finance, then we are looking at a gearing which is above the generally accepted threshold of 50%. So please be mindful of how yeah, it could affect the gearing ratio. And don't worry, we've got you covered in one of our mock examinations. And if you practice that task, and if you go through the masterclass videos, and if you go through the answer plans, you would be prepared to tackle a similar question in the examination. Moving on to WAC, which is also connected to sources of finance. So I intend to discuss WAC today, and it's also been a topic which is frequently tested and poorly answered by many candidates. How do we know? Well, if you refer to the examiner's reports from the past case studies. Now, please don't waste your time reading through those reports, as you only have about 3 weeks' time. But as tutors, whenever the examiner's report is published, we make sure that we read through uh, the report in full. And one thing that we've come across is that students' performance in questions pertaining to WAC has generally not been satisfactory. So you need to have a solid understanding, a conceptual understanding of the concept of WAC. You also need to know what would be the limitations of using WAC as the discount factor in investment appraisal, which could also be termed as the suitability of using WAC as the discount factor for investment appraisal. So such a question requires your understanding of both P2 as well as F2. And moreover, you should also be able to explain or demonstrate your understanding of how certain business decisions would impact the weighted average cost of capital of the company. Now, the good news is that in today's masterclass, or in today's F2 mock discussion, we will look at a WAC related task, and we will be actually giving you a conceptual understanding of WAC at a very basic level. And we would also discuss a task which has a requirement pertaining to discussing the impact of certain business decisions or events on the weighted average cost of capital. So more on WAC later on. We move on to group accounts. Another key component of the F2 syllabus, because remember, group accounts is tested only at MCS. OCS does not involve a group account scenario. So there is a high chance that the examiner tests your knowledge of group accounts. So remember, basically, with regard to investments in another entity, you could be looking at different scenarios where you are making an investment which results in a subsidiary or a joint venture or an associate. So these are three likely scenarios when it comes to investments by Trimayr in other entities. So with regard to subsidiaries, at a very basic level, you should know the accounting implications of acquiring a new subsidiary. It could be a wholly owned subsidiary, 100% owned subsidiary, or a partly owned subsidiary. So, say for instance, a 60% ownership in the investee. So, such scenarios could also involve explanations pertaining to the goodwill calculation, the non-controlling interest aspects of a partial acquisition, and fair value adjustments. So once again, we've got you covered in our mock exams. We've covered scenarios where we've explained the goodwill, the fair value adjustments, and non-controlling interest calculations. So please make sure that you are thorough with these areas. In particular, we've seen in recent past questions relating to goodwill, and the challenges of calculating goodwill have been tested, uh, and students have not performed well in those topics as well. So please make sure that you take sufficient time to familiarize yourself with these concepts, especially if you are coming through an exemption route. Chances are that you may not have studied the technicalities of goodwill calculations and the valuation of non-controlling interest, because remember, there are two methods of valuing non-controlling interest. You could use the fair value method, or you could use the proportionate assets method. And Trimayr could very well be considering both because it is applicable for Trimayr. And remember, when there are goodwill calculations, there will need to be fair value adjustments. And you should also be aware of how those will impact the financial statements. Moving on, you could also be presented with a scenario where Trimayr enters into a joint venture with another company and how it would be accounted in the financial statements. There could also be situations where Trimayr is looking at an investment which gives rise to an associate. So the accounting treatment for both joint ventures and associates is the same, and it's the same accounting standard which governs both joint ventures and associates in terms of accounting. So that's equity accounting, IAS 28 investment in joint ventures and associates. So please make sure that you are thorough with the accounting standard. And we've also seen questions where the examiner has tested the knowledge of the students, whether they are able to identify how an investment results in a subsidiary, a joint venture, and associates. We've had situations where students have gone with percentages. So the moment they see, say, for instance, 51%, they think it's a subsidiary. Or when they see, say, for instance, 30%, 40%, they jump into the conclusion that it's an associate. But you need to remember that the percentage shareholding or the percentage investment is only an indicative factor, and it's not the conclusive factor of determining whether an investment gives rise to a subsidiary, a joint venture, or an associate. So more on this has been covered in our masterclass. So I do not want to take you through all the details because due to lack of time, we will have to make sure that we cover the back discussion today. Moving on, integrated reporting. I would say this is a fairly straightforward topic from the F2 syllabus. There are no calculations here. So if you have a good conceptual understanding of integrated reporting, and if there is a question on integrated reporting, you have a good chance of scoring high marks for this topic. However, you should make sure that your responses are applied to the given scenario. Unlike an answer to an accounting standard, you cannot simply dump theory for a task on integrated reporting. You need to look at the background, and you need to look at what is required in terms of the integrated reporting approach by your examiner. So, as part of your preparation, please make sure you have a thorough understanding of the six different capitals that are reported in an integrated report. And as you would be aware, all listed companies now take an integrated reporting approach towards the annual report. So you will find the six capitals being reported in the annual reports of all listed companies, especially in the UK. And you don't have time to go through annual reports now with the exam in 3 weeks time. But what you need to know is that Trimayr, how the six different capitals shape up for Trimayr, and how in the examination various business decisions or events would impact the capitals of Trimayr. So that's what you will be expected to undertake in the examination. So your responsibility would be to make sure that you have a thorough understanding of the six capitals of Trimayr. Moving on, financial ratio analysis. And remember, you will not be required to perform any calculations with regard to ratio analysis, but you could very well be provided with calculated figures, or you could be required to perform a very basic calculation, such as recalculating a gearing ratio, or calculating an operating profit margin, or maybe identifying the ROCE based on the information provided. So those are not complex calculations, fundamentals. And if you know the formula, you can easily work out those numbers. And you also need to know that financial ratio analysis looks at the company's performance as well as the position. And we also look at it from diverse perspectives, from profitability to liquidity to activity or efficiency ratios to capital structure. And the current position of Trimayr has been analyzed in detail in our financial analysis uh, document, as well as the videos that we provide you along with it. So we urge you to go through uh, the financial analysis document well before the examination, to make sure that you understand the present context of the company with regard to these ratios. And as I mentioned, more than the calculation, it is the interpretation and the analysis of numbers that you have to be prepared for. Moving on, financial reporting standards, and there are a number of reporting standards. And the question that we often get from students is, which of these accounting standards are likely to be tested and which ones can we avoid? Well, you can't avoid any unless you want to take a risk uh, seeking approach towards your exam preparation, because one of these accounting standards had not been tested since CIMA introduced the new syllabus in 2020, and it was being, singled out every time. However, in the recent sitting, not the May examination diet, but before that, if you look at Shiny Glass exam sittings, this particular accounting standard, that is related party disclosures, was examined for the first time in 5 years. So you cannot rule out any topic as not relevant or not frequently tested, because any area can be tested in your examination, and do not take any chances by skipping areas. So with regard to financial reporting standards, remember IFRS 3 business combinations, which pertains to goodwill calculation and the reporting. Please make sure as part of your revision, you cover IFRS 3 along with the topic of goodwill. IFRS 9 financial instruments has not been tested, of late at a very lengthy task, but please make sure that you know the different types of instruments, especially with regard to debt and that you are able to explain. So we've had a question with regard to bonds and how it would impact the financial position of the company. So you have to be prepared as to how different financial instruments could impact uh, the company. IFRS 10 relates to consolidated financial statements. So this is the accounting standard relevant for a subsidiary. And as part of your group accounts revision, you would definitely be covering IFRS 10. IFRS 15, revenue from contracts with customers, another accounting standards which has been frequently tested. So please make sure that you are aware of the 5-step process which IFRS 15 recommends with regard to accounting for revenue from contracts with customers. And not only should you be aware of the 5 steps, you also should be thorough with how those 5 steps would be applied to a given scenario. And as you know, we've got you covered because this is our mock exam coverage document. And that means we've also covered IFRS 15 within our mock examinations. IFRS 16 leases. So remember, uh, in the F2 syllabus, you are required to uh, demonstrate your knowledge of accounting for leases from the perspective of a lessor. However, we've had one exam variant where the examiner tested leasing and the examiner tested the accounting from the perspective of the lessee, which is usually tested at the operational level. So we are not taking any chances. We've covered both scenarios, and you will come across a question pertaining to accounting for leases from the perspective of a lessee. The reason being, some candidates have not sat for the operational case study. They have been exempt from the operational case study, which means they have not learned uh, accounting for leases from the perspective of lessee. And if you had skipped OCS, then you should make sure that because it was once tested that you're thorough with IFRS 16 leases. IAS 12 deferred tax, actually there is no particular um, mention of any deferred tax in the financial statements of Trimayr. So we've not set a particular task on this pertaining to Trimayr. However, we've covered a model task within the F2 revision materials, and this has also been highlighted in the mock 7 document that you are to refer to a model question and answer on IAS 12 deferred taxes by referring to the F2 revision cards. As we move on, IAS 21, the effects of changes in foreign exchange rates. Remember, this could be tested from 2 different perspectives: accounting for foreign currency transactions and also accounting for a foreign subsidiary. Both these situations will involve translation of foreign currencies. So within IAS 21, that's exactly what we are looking at. So please make sure that you cover both possibilities. And the F2 revision card has a question on accounting for a foreign subsidiary. If you study the theories through the F2 revision cards along with that practice question, then you have definitely got it covered with regard to accounting for a foreign subsidiary. IAS 24 related party disclosures. Once again, we've included a question within the uh, F2 revision cards itself because it makes your life easy. And please make sure that you are not skipping IAS 24 for the simple reason that it was not tested for the last 5 years. And of course, it was the case until Shiny Glass, because for the first time, the examiner did test IAS 24. As I already mentioned, IAS 28, investments in associates and joint ventures, equity accounting method is covered in IAS 28. So please make sure that within group accounts, IAS 28 is also covered. As we move on, IAS 33, earnings per share. This was also an accounting standard which was not tested for a while, and some candidates or even some tutors had given up on including questions from EPS within their mock examinations. However, it was also tested in the past case studies. So please make sure that you know the fundamentals with regard to IAS 33 as it is relevant for a listed entity. And this is also the only ratio which has a dedicated accounting standard stipulating the accounting calculation as well as the interpretation of the ratio. As we move on, IAS 37 provisions, contingent liabilities, and contingent assets. Once again, if you refer back to the past papers, you will definitely find a task pertaining to IAS 37 on any pre-seen diet. So please make sure, especially with regard to accounting for provisions, you are well aware of the three conditions and be prepared with regard to application of those in a given scenario. And once again, we've got you covered in our mock examinations, and hopefully that will help you with your exam preparation too. IAS 38 intangible assets can be tested from multiple perspectives. So within our mock examinations, we've actually covered three different tasks pertaining to IAS 38 because this is not tested in one particular way. Now, if you, for instance, take IAS 37 provisions, you know that there are three conditions, and whether to create a provision or not revolves around the fulfillment of those three conditions. However, if you come to IAS 38, it's much broader than that, as there are numerous topics that could be tested. For instance, you could be tested on development costs, you could be tested on intangible assets in general, and you could also be tested with intangible asset plus integrated reporting related tasks. So IAS 38, as we look at the past papers, we do find that it has been tested from multiple perspectives, and that's why it has taken us to cover IAS 38 within three different mock exam tasks. So please make sure that you are thorough with IAS 38. I'm sure you would have more questions. Definitely, all your questions will be taken up today, but a little later, once we've gone through a mock exam task pertaining to F2. So, as part of the workshop, let's move on to the F2 mock discussion, where we will be looking at the first mock examination, which is available on the TCS exam platform for you to practice. And those who have already attempted the mock exam, well, you would have, if you had been sticking to our study plan, you would remember that the mock is themed at diversification. And to give you a background, Trimayr was considering an entry to the full service beauty salon market, and the scenario expanded onto an acquisition in the second section. So we were considering the acquisition of a company named Grace and Glamour Salons, G&G, and today in our discussion we will focus on section 3 of the mock, where we are almost finalizing the acquisition of G&G. So let's read through the question. Trimayr's board has just concluded the initial negotiations with two shareholders of G&G. While the shareholders have expressed interest in selling a majority stake to Trimayr, so it's going to be a majority stake. It's not going to be 100% owned subsidiary. Currently, our subsidiary or subsidiaries are 100% owned because we have been provided with the consolidated financial statements. So we definitely have a subsidiary or more. And since there is no non-controlling interest, it means that the subsidiary is fully owned by Trimayr. So in the examination, the examiner could very well bring up a scenario which involves the acquisition of a majority stake, because the examiner can also test your knowledge of accounting for non-controlling interest in such a scenario. All right, let's read further. So we are planning to acquire a majority stake, and the shareholders are willing to sell a majority stake. However, they have presented a counter offer to the Trimayr board, and more details are found on the attachment. So as usual, let's refer to the attachment. Let's gain an understanding of the background, and thereafter, let's read through the two subtasks. So this is an extract from board minutes regarding the acquisition of G&G. The CEO informed the board that the two founding shareholders are willing to sell a majority stake. However, they have presented a counter offer with the following terms. Right, so we have three main terms. Purchase price of $30 million for the sale of a 60% stake in G&G, with 20 million to be paid in cash and the remaining 10 million to be settled through a share for share exchange. Right, so something that should have struck you is that we need cash to seal this acquisition, and we need $20 million. And the pre-scene does provide us some information with regard to our cash and cash equivalents, because we have the financial statements for the recent financial year. So as at 31st December 2024, our bank balance or cash and cash equivalents stand at 6.6 million. Now that's definitely not enough to acquire the company, and therefore remember, we will need to opt for a funding of at least another 15 plus million through debt or equity. So that's one thing that you could have remembered, but don't worry if you missed it. You're still at the early stages of understanding how to read, analyze the reference material so as to come up with appropriate points for the answer. And I beg your pardon, because there's a small typographical error. It has to be $, because the country is Taslan. All right, let's read further. Ryan and Blake, the two founding shareholders, are to be granted non-executive director positions in the company until they choose to step down or divest their shareholding. So this is not a financial term of the offer. This is with regard to retaining control by holding non-executive director positions. Furthermore, we are told that no employees of G&G shall be laid off for a period of 12 months post-acquisition without the express consent of Ryan and Blake. So there are two founding shareholders who are insisting that they be given non-executive director positions, and that their employees also being given protection for a period of 12 months. Furthermore, no reduction in remuneration packages shall occur post-acquisition without their express consent. So we see that not only do they want to retain a certain percentage of shareholding, 40% to be precise, because they are willing to sell only 60%, which means they will hold on to 40%. At the same time, they want to hold on to director positions, and they want to protect their employees with regard to job security as well as their pay. So definitely not the ideal proposal that Trimayr would want to accept. But let's read further. The CEO mentioned that the proposal from G&G shareholders will be taken up for discussion in the next board meeting, allowing all board members the time to review the details before arriving at the final decision. The finance director stated that the board should also review the potential impact of this acquisition on the company's cost of capital. So now we are getting at that before proceeding with this acquisition. So there are three terms, and the finance director is also drawing the board's attention towards the cost of capital of the company before deciding to proceed with this acquisition. All right, there are two subtasks, and we intend to discuss the subtask pertaining to F2 and pertaining to the topic of WAC. So I will discuss the second subtask. Secondly, evaluate how this acquisition may change Trimayr's weighted average cost of capital. How this acquisition may change. So you will be required to explain with justification whether the WACC would change, and if the WACC is to change, whether it would be a positive change or a negative change. In other words, whether the WACC would increase or decrease. And remember, this task has a subtask because you see the conjunction and the implications of any such change. So it's not a straightforward task. The examiner is asking you how this acquisition may change Trimayr's weighted average cost of capital. Now, in fact, if you take a past paper task, the examiner chose to ask how a particular event would increase the WACC. Now, in this mock, it's about how it would change the WACC. So it's being more indirect because now the candidate has to decide whether it will increase the WACC or decrease the WACC. And thereafter, you also need to explain the implications of any such change. So when you come across a task which is worded like this, you need to firstly decide, all right, in my answer plan, firstly, I will explain how the WACC would change. And when you plan your answer, you need to plan whether it will lead to an increase in the WACC or a decrease in the WACC, and why do you say so? And after that, you will dedicate another section of your answer to explaining the implications of any such change. So remember, we provide you with full suggested answers. And if you read through the suggested answers, you will find how you are expected to explain uh, the change. And remember, we base the answers on examiners' published answers for the past case studies. So you are expected to follow a paragraph by paragraph style of writing, and that's exactly what we've done in the suggested answers that we've published. However, for your understanding of the approach and the technique behind the answer, we also prepare the additional resource of answer plans. So I will use the answer plans that we provide you for revision purposes as well as for the purpose of uh, developing a mind map of the answer. And remember, these are more detailed answer plans than what you are expected to develop when you plan the answer within the examination. Just a word would be enough for a paragraph, just so that you know what you are going to explain for uh, the particular task that you are attempting. All right, so we arrive at the answer plan, how the acquisition may change Trimayer's WACC and the implications of any such change. Now, as we highlighted in our master classes, if you are presented with a topic which involves a highly technical concept, it would be an ideal start to explain the technical concept first. And you should not overdo it. For instance, if there is a task on, say, negotiation, you are not required to explain what is negotiation to your superior. However, when there is a task which is technical, such as the WACC, and when the board is requiring you to explain whether the WACC would change or not, you would see that the examiner could provide you with a technical explanation of the concept of WACC. So to start with, we will be explaining what is WACC briefly or very briefly. Do not get into a theory dump situation, which we noticed in some of the answers for mock 3. And please avoid such theory dumps. So maybe a sentence or two explaining what is WACC, because before we explain how the WACC changes, we need to firstly explain what exactly is the WACC of Trimayr. So remember, for your understanding and for the purpose of learning, the weighted average cost of capital represents the average cost of an entity's total pool of funds. This is the long long-term funds that a business uses to finance its operations, long-term sources of finance. And if you take Trimayr, we have share capital as well as debt. So the Trimayr's weighted average cost of capital will include the costs of its equity and debt. Now, for beginners, let me explain this in detail. Those who are already aware of this concept, please bear with me for a while, because we've had situations where candidates coming through exemptions have not covered the topic of WACC before in the programs which gained them the exemptions. Now, the two sources of finance are debt and equity. And when a business opts for whichever the source, the business incurs a cost of that finance. So if it's a bank loan, you are supposed to pay an interest, and that interest is known as the cost of debt. Of course, if you really look at it from the perspective of calculating the VAT, you will also make an adjustment for the tax component pertaining to the savings, right? Because remember, interest is tax deductible. So we say that the cost of debt should account for the tax savings that the interest brings. So let's not get into those details, because you are not required to go into the calculations of the WACC. But this is for your understanding that simply consider the interest rate pertaining to a loan, or simply consider the coupon rate for a bond or a debenture as the cost of debt. And the cost of equity is reflected in the dividends expected by the shareholders. So we have different methods of valuing the expected dividend by the shareholders, and the different methods of calculating the cost of equity. The dividend expectation is also beyond the scope of the management case study examination. So don't worry about how we would be calculating the cost of equity. You will learn those in your strategic case study, especially with regard to F3 syllabus. So the weighted average cost of capital accounts for all the sources, and it considers the costs of all the sources. So for Trimayr, we consider the interest payable on any bank loans or debentures or bonds, as the case may be. And we will also consider the dividend percentage expected by the shareholders of Trimayr. And this is not just any average, it's a weighted average cost of capital. So what happens is, let me take some simple numbers. Assume Trimayr is funded 100 million in total is the long-term funds in the business. And for simplicity, let's assume 50 million is coming through equity and another 50 million is coming through debt. The proportion of debt and equity is exactly 50 and 50. If the equity component is 75 million and the debt component is 25 million, then the proportions would be, as you would easily know, 75% equity, 25% debt. And remember, each source has its own cost of finance, and generally, equity is more expensive than debt. I'll explain why. I've explained why in the WhatsApp group discussion as well. As you would remember, there was a question which came up maybe a week or so back, and we did respond to that question in the group, but we'll get to it. For the time being, remember, when we calculate the WACC, we also identify the respective proportions of debt and equity in the total pool of funds. So for simplicity, I'm taking it as 50 million, 50 million, and that means it's a 50%, 50% proportion. And for simplicity, let's assume the shareholders of this company are expecting a dividend of 20%. So cost of equity is 20%. And let's assume that this 50 million is coming from one bank loan, and the bank is expecting a 10%, or the bank has stipulated a 10% fixed interest rate on the 50 million loan. Now, if you calculate the weighted average cost of capital, let's ignore the tax implications on the cost of debt. If you calculate the WACC using the formula, what you will simply account for is 50%, that is half of the funds coming at 20%, and another half of the funds coming at 10%. So what would be the weighted average? And because I have weighted both of these sources equally, I will end up with a WACC of 15%, because that is the average of the total 30% uh, cost of uh, both debt as well as equity. So when the proportions change, the percentage will also change, because you have to account for the different proportions when you calculate the weighted average cost of capital. So the WACC can be explained as the cost of capital, or the weighted average cost of capital, which is derived or calculated by first estimating the cost of each source of finance separately. And as I told you, the calculation of this is beyond the scope of the management case study examination. Right? In the OTQ examination, you do come across certain calculations, but not at the MCS examination. So for illustration purposes, I did calculate the percentages, or I did take the percentages as 20 and 10. So that's cost of each source of finance. And then you have to weight each source according to their respective proportions, which I assumed as 50%, 50%. And then we arrive at a WACC of 15%. So this WACC will be used for decision-making purposes by the business, because we have a company which uses both these sources of funds, and we need to make sure that we generate sufficient returns to pay both the shareholders as well as the lenders. And when do we do that? Well, we will do that if we undertake projects which yield a return above 15%, or projects which yield exactly 15%, because in that case, we can pay both the shareholders as well as the lenders. So coming back to the question, how will the WACC change due to the acquisition? So remember, we have a situation where we are looking at a share for share exchange. That's what the question does say, right? So they are interested in selling a majority stake, and in the reference material, it was clearly indicated that they are expecting a share for share exchange of 10 million. So we will issue new shares. So remember, when new shares are issued, new equity is coming into the business, or there is an addition of equity. So from 50 billion, let's assume it goes up by 10 million. And that means the weighting of equity will increase. And when the weighting of equity increases, the WACC will increase, because equity is a more expensive source of finance. The more equity you bring in, the more cost of finance that you will have to bear. So in the response, you should say that the share for share exchange will result in new equity. And because equity is generally more expensive than debt, it will lead to an increase in the WACC. This is because the more expensive source of finance, the proportion of the more expensive source of finance is increasing, as I pointed out, from 50 million to 10 million. And that means the proportions will tilt in favor of more equity and less debt. More equity means more cost of finance, and more cost of finance means the weighted average is likely to increase. So that's one point that we've mentioned within our answers. right? We've clearly said that if Trimayr issues additional shares, the weighting attached to equity will increase in the WACC. And remember, the cost of equity finance is always higher than cost of debt finance. So the increase in the weighting of equity, which is the more expensive source of finance, will increase the WACC. You can do the calculation and see, and you will see that the WACC has increased. And furthermore, the 20% dividend expectation could go higher if the capital market, if the investors or the shareholders of Trimayr believe that the new shares are being issued for a risky business venture. Remember, we've not diversified since inception. In the mock exam, we are looking at a scenario where we are entering the beauty salon market, and we are entering it through acquisition. So if the shareholders are skeptic about the board's decision, if they become more concerned about whether Trimayr is making a rational investment with regard to expansion, those negative sentiments or skeptic views of the shareholders could increase the dividend expectation of Trimayr. So we've also mentioned the point, not only the cost of finance, sorry, not only the WACC will increase mathematically, but the increase could be higher based on the behavioral implications of the shareholders. So that's something you also study in behavioral finance, but it's not within the scope of management case study. So we've pointed out that the increase in the WACC could be greater if shareholders perceive higher risk in acquisition. And that would mean the cost of equity will increase further, and it will push, or it will elevate the WACC even more than what we would mathematically calculate and identify. And also remember, this could seem as a bit of a far-fetched argument, but this is something that the examiner had raised in a similar exam task in one of the past papers. When the company is making risky investments, the lenders also could become concerned because they have lent us, on a long-term basis. They would be worried about not only the interest, but the capital repayment. So if they believe that the company is making risky ventures, any further borrowing could come at a higher finance cost, because when banks lend, they consider the risk profile of the client. So if they believe Trimayr is a more risky client, then the interest that would be levied upon Trimayr would be higher. So when there are concerns from the lenders, it will result in increased finance cost. In other words, interest cost on new loans. Whatever we have obtained contractually may not be affected unless you have terms incorporated by the banks which say that the bank reserves the right to charge variable interest rates based on the company's performance. So any new loan is likely to come at a higher percentage. And as we already noticed, Trimayr's SOFP as at 31st December indicates that our bank balance is only 6.6 million. And we need to pay $20 million to the owners of G&G. So new equity from Trimayr or a new borrowing will be required to raise this additional 20 million that we would need. And if we opt for borrowing, the borrowing is likely to come at a higher interest rate due to the increased WACC. Because the bank would be aware that we are issuing new shares. At the same time, we are also raising funds from lenders, and therefore definitely they are likely to stipulate higher interests than what they are currently charging from us. So what would be the implications of the increase in the WACC? Because it was part of the subtask, we also need to explain the implications of any such change. So the change is going to be an increase, and that's not a positive change. WACC increasing means the cost of finance is increasing for the company. And what would be the implications? Well, the implications are on the board of directors to deliver, because there will be pressure on them as they need to provide higher returns to shareholders and lenders, because higher cost of finance is due to higher risk profile of the company. If the shareholders believe that their investment is safe, they are unlikely to expect higher returns, because higher the risk, higher the return. Same thing with the banks. If they perceive lower risk in lending to a client, they are unlikely to insist on higher interest. And when the WACC is increasing, it is an indication that the risk profile of the company is negatively being impacted. So definitely the pressure is on the board of directors to provide higher returns to compensate for the higher risks. And any new investments that Trimayr undertakes, including the investment in the new subsidiary, should generate an IRR, an internal rate of return, to offset the increase in the WACC. So remember, in investment appraisal, we consider the WACC as the discount factor, because we aim to ensure that at least the WACC is generated from any new investment. Because if you generate the WACC, that means you can pay the dividends that the shareholders expect. You can also pay the interest that your loans as well as debentures, bonds are required to pay. So any new investment that the board undertakes must yield a return, an IRR, which will offset the increased WACC of Trimayr. Otherwise, what could happen is the share price of the company could drop, uh, because if the shareholders perceive higher risk and if they get lower returns, obviously the demand for Trimayr shares will decrease, and that would bring the share price down. And on the other hand, if the lenders become too concerned, if they have terms within their uh, debt instruments which could allow them to ask for early repayment, they could insist on the same, or they could insist on any other terms which would pressurize the board to repay the debt. And if the share price by any chance decreases significantly, then it will have a knock-on impact, because this will raise significant concerns among shareholders, and this will also cause the shareholders to doubt the effectiveness of the board of directors to run the company profitably as well as in a sustainable manner for the long term. So to sum up, the implications would be that the board will need to make sure that they deliver higher returns to compensate for the higher cost of finance, which would be indicated by an increase in the weighted average cost of capital. So that's basically the discussion pertaining to the subtask on WACC. And I will open up the session for a Q&A. And this is a reminder that we collated the results for the recent MCS sitting, and we've achieved a 90% pass rate. And it's something that is truly amazing, considering the last exam sitting. And we would definitely credit the candidates, the students who signed up for the program, and they stuck to the study plan, and they accomplished the results not only with our resources but also with their commitment and hard work. So when both ends deliver, you could expect significant results. All right, let's open up the session for a Q&A, and to facilitate the session, let me pause the recording for a while. All right. Thank you for those who raised questions, and we hope we were able to answer them as best as we can. And uh, please reach out to us if you have any more questions, if you need any more information, please reach out. And please also make use of our resources through our social media handles. And until next week, thank you and have a great Sunday ahead. So, see you next week. And until then, take care and see you soon.